It's good to see y'all. I appreciate you having me on again. I think everyone here knows me, right? Everyone here's last time I'm your guys' new RVP, so you guys will start seeing stuff from me. Please reach out to me though, okay? You know, you guys are proactive agents, right? Proactive agents are agents who are at these trainings, who are in the middle of the day, right, working, right, and maybe you're full time, maybe you're part time, but please reach out to me, okay? Shoot me an email, right? Gang emails me, and I'm sure she knows that I've responded, right? I'm here to help you, okay, in your business. I'm here to help you succeed and do whatever. These trainings, I really enjoy because this is my time to like help you guys, give you guys information and knowledge that you may not have because you guys are busy people, right? So this is the time where we really get to learn together. So I want it to be conversational, right? I don't just want to be talking at you guys. If I say something that confuses you, stop me. If I say something you want to dive more into, just unmute yourself and let's just have a conversation, right? The point of being here is to learn together, okay? Today we're going to talk about business planning using life insurance, okay? People call it advanced markets, but to be honest with you guys, what we're going to talk about today is strategies to use life insurance, right? Business planning strategies using life insurance. That's it, okay? How can all of us on this call use the life insurance products that we have to help businesses? That's it. All right. We're not tax advisors. We are not CPAs. We are not lawyers. We're not trust. We are not in charge of living will. Guys, we are finding ways to use life insurance to help our small business owners and businesses. Okay. It's that simple. So how do we do that? Okay. We're going to talk a little bit about the overview of business planning. We're going to talk about executive bonus arrangements today and key employee. We're not going to really get into buy-sell agreements, guys. Okay. We can talk briefly about it. I'll show you guys where to go get information, but like the amount of buy-sell agreements I've done in my career, it's actually zero. Okay. We are not buy-sell agreements, guys. All we're doing is getting involved at the very, very end of the buy-sell agreement between two people buying or selling a company. Okay, we come into the very end. It's a very long process that usually we don't see much of. Okay, and we again get involved at the very end. It's not something that you really see in our world as much as people talk about it. Okay, if you ever run into a situation where you are using life insurance to help someone buy or sell a company, reach out to me. All right, reach out to me. We're not going to train on it today. We're going to talk about executive bonus and key person why, because those are the most familiar. And those are things that you guys can go out there tomorrow and start talking to your friends and small business owners about, okay? But in order to understand why we would use life insurance to protect small businesses, let's just talk a few slides about some business stats, okay? Let's talk about small businesses in particular. 99.9% of businesses in the United States are comprised of 33.2 million small businesses, right? This number is from 2024, okay? So almost half of the private workforce is small businesses, okay? Almost half of the employees in this country work for a small business, all right? Small businesses run our country. They are the backbone of the macro economy, okay? But 51% of U.S. employees say they're actively looking for new jobs or watching for openings. I'm sure some of you on this call, maybe everyone on this call, has been in that position where you worked at a company one time. Maybe it was a small company, maybe it was a big company, and you're like, hey, I don't want to work here anymore, right? 51% of employees say they're actively looking for new jobs. Employee turnover is the number one reason small businesses fail, right? It costs a lot of money when you lose someone at a company. Let's say I own a company, right? And in my company is comprised of us, what are we, 6, 7 people on this call, right? So I'm the business owner, right? And Joy, right, is our top executive, okay? Meaning she has trained all of you guys, okay? And Ging is my top engineer, right? We can't make the microchips without Ging, right? And Joy sells them. Okay. So Joy and Ging are my top two people, right? If something happens to one of them, or if they leave, guess what? I now have to train. I have to hire someone to replace Ging to learn how to build, right, our microchip. Okay. And then Joy has to work with that new person and get them up to speed on how we make it so she can sell it. That might take a year. That might take 2 years. That's going to cost me a lot of money. And a lot of money is going to come out of my pocket as well, right? Employee turnover is not good, okay? It can take years to hire someone just as good as Ging or Joy in this example. You guys with me? So we're going to talk today about how we can kind of avoid that. How can we use life insurance to alleviate employee turnover? All right. So we have some solutions. We have a solution called executive bonus. All right. We'll talk about key person here in a second and why that's important. So guys, remember the first few slides, we're just talking about how important small businesses were to our economy, right? They're the backbone of the macroeconomy, right? One of the main reasons small businesses fail, it is the number one reason small businesses fail, is employee turnover. So I want you to remember that. Okay. So we're talking about employee turnover. We're talking about how important small businesses are to our economy. So how does life insurance play a role in that, right? How do we on this call, how are we going to use our license, our life insurance products, okay, to help that small business with employee turnover? Okay. How does life insurance play into that, right? People are probably wondering. Well, let's talk about what we call an executive bonus arrangement, or also known as a Section 162 bonus plan. Okay, that's what the IRS calls it, or the IRC, Internal Revenue Code. Okay? We call it an executive bonus arrangement. This is a way for companies to reward certain employees to keep them around. Okay? If I own that small company, right, and Joy is planning on leaving, or Ging, sorry, she was the one who was leaving earlier. And Ging's planning on leaving, and I say, hey, I know it's a small company. I know I don't have a huge 401k plan for you. I know I don't have the best health benefits for you, right? But what if I were to fund an index universal life insurance policy for you, Ging? She's probably like, oh, well, I've never heard of that. How does it work? Well, let me tell you about it. I can fund this thing 10, 15, 20 grand a year. Okay. And if I do that for the next 10 to 15 years, if you stick around with me, that money that I put into it is going to be attached to a death benefit. God forbid you pass away too early. You get to choose a beneficiary. Okay. Because Ging's going to own the policy. She's going to be the insured on the policy. She chooses a beneficiary on the policy. It is her policy, but I'm going to pay for it. So she reaps all the benefits of it. Right? Hey, Ging, I'm going to fund this policy 20 grand a year. Okay? 20 grand a year is going to be your bonus, Ging. Right? But rather than me putting it in your pocket at the end of the year just as cash and you being taxed that 20 grand, maybe at 24%, you see what? 13, 14 grand of it. I'm not sure, guys. Sorry if my math was pretty bad, but maybe you see 14 grand of it. If I can give her that 20 grand as a bonus, she might be happy. Right? But she's only going to be able to see 14 grand of it after taxes or whatever her tax bracket is at that time. Okay? Why not put that money into an IUL for her? What do we know about an IUL, guys, if you properly fund it, right? That 20 grand I'm putting into the IUL after 10 years is going to be worth twice as much, 3 times as much. But it's also attached to a death benefit. And guess what? In 10 or 15 years, when Ging decides to borrow from it, she can use that as an additional retirement supplement. God forbid she passes away too early. Her beneficiary is going to receive a death benefit. But what about if she gets ill? What if she has the living benefits on there? What if she has long-term care? Now I've equipped her. I've protected her. I've allowed the money that I'm paying her in a bonus to grow exponentially, right? She can then borrow from that via the tax advantage loans and tax advantage withdrawals. And guess what? The money that I put in there can't be lost due to a negative performing index, right? She can't lose that money. So we're taking her bonus now. We're turning it into this big, beautiful IUL, right? This big, beautiful project, this big, beautiful vehicle, if you will. So now she's like, all right, Jesse, you know what? I like that. I can work with that, right? Like that makes me happy that you're going to invest in me, but also you're going to invest in my family, right? Guess what that does? Now Ging is going to think twice about leaving because she might be able to go to another company for an additional $10,000 a year, but are they going to be putting money into an IUL for her? Paying her a bonus or paying Transamerica $20,000 a year for Ging into an IUL? Right? That's all it is, guys. Okay? It is a bonus paid by the company, an employer, to an employee that's used to pay life insurance policies. Okay? So there's two ways you can do it. And there is a slide that will kind of circle around and show you guys. Here it is. Okay, good. There's two ways you can do it. Okay? I can pay Ging cash at the end of the year, 20 grand. She'll be taxed on that 20 grand, right? Because it's a bonus, right? Or I can just pay them Transamerica directly. Okay. I will be honest, most of the time people are just paying the company directly. Okay. The employer is usually just paying Transamerica directly. All right. But because it's considered a bonus, guys, that employer, okay, is using that money as a bonus. The bonus is tax deductible to them. Okay. It is taxable income to the employee, but all they're doing is paying taxes on the front end, just like you would if they funded their own IUL. And then it's going to grow 2 times, 3 times, right? So they're not worried about that. That's fine. It goes on their end of year tax returns, right? And they are taxed on it. It is taxable income to them technically, right? But they understand how the IUL works because you've obviously explained them and educated them, okay? So now the business not only gets to write off those premiums as a bonus, but I don't lose Ging either in the process of doing it. You guys with me? Ging's not going anywhere, hopefully at least, right? That's why I would open it up. Okay? So now I don't have to worry about losing Ging and having to replace her and pay someone the same amount of money, but also educate them, which could take 2 to 3 years to get them to where Ging was, right? That loses me money, costing money. So not only do I not lose Ging anymore, but I can write these premiums off when I pay it to the company, right? Because it's considered a bonus. It's tax deductible to that business. Win-win for that company. It's a win-win, guys. So what is it for? Again, it's for recruiting and retaining employees. You might use it to recruit employees as well, right? You might have someone who's really highly talented and you're saying to them, hey, I can't offer you that extra $10,000 in salary. But what I can do is I can make up that $10,000 salary and fund you an IUL, right? I can put that $10,000 into an IUL. I can write it off as a bonus to you. It'll be tax deductible to me, okay? And now that $10,000, rather than you just receiving it at the end of the year as in a salary, no, that money's going to grow. It's also going to be attached to a death benefit that you can use later on as a tax advantage, tax retirement supplement, right? It's also used for offering executive benefits beyond a qualified plan, right? So a qualified plan is like a 401k, guys, right? This is another alternative to that, right? We're not telling people not to have 401ks. That's silly. But it's an alternative. It's an addition to. It's a supplement. You can also write executive bonus plans for a group of employees, right? Like if I own a business, I can essentially, if all of you guys were my executives, and I could somehow, right, convince the IRS that each of you are executives and pay you all bonuses at the end of the year, and instead of paying you directly, I put it into an IUL. Well, there you go. Okay? It's pretty simple. But we need to understand why you would do an executive bonus arrangement in the first place, because let's talk about that. Okay? Here are some of the benefits, right? It distinguishes its compensation package. It's a way to attract and retain key employees. Okay? Pre and post retirement benefits, guys. Remember, it's just an IUL, right? It's usually an IUL. Now, there's no product specificity. It's not product specific, okay? You don't have to do an IUL, but a term doesn't really make sense. That's not as attractive, right? I want to fund an IUL, okay? Bonuses paid are tax deductible as long as that compensation is reasonable. So what that means is, guys, the IRS won't allow me to write a bonus to Ging, right, for $100,000. If her annual salary is $200,000, I'm not going to be able to pay her a 50% bonus. Does that make sense? Like, it has to be what they call reasonable. Compensation is reasonable, right? Like 10, 15%, whatever that rule is. That's where the CPA gets involved. Where I would go to the CPA and say, hey, how much can I pay Ging in a bonus so I can write it off at the end of the year? It's not going to be her full salary amount, so you can't fund the IUL her full salary amount, guys. But, as long as the total compensation is reasonable. You don't need the IRS to approve it, okay? The IRS can't also terminate it. The IRS can't get involved in the business of getting that person the IUL. It doesn't cost the business anything to apply and get an IUL, right? The same, the insurance charges are there, right, still, but there's no admin cost for them to have to do it, right? We're not going to charge someone, if you want an executive bonus arrangement, it'll cost you $500. No. And every IUL, every executive bonus arrangement that you set up is customizable. It can every one of your guys' executive bonus arrangement is tailored to that employee. And then obviously for the executive, for that employee, they get to enjoy the benefits of the IUL, guys. It's that simple. They enjoy the tax-deferred growth. They enjoy that they get to choose a beneficiary, and that beneficiary receives the death benefit. They get to own the policy. They have access to it. Okay, they can also put more money into the policy if they'd like to, right? They own it. Now, pay attention here what this says. For business owners who want to take advantage of the strategy themselves, special consideration should be given to the tax benefits for the business entity as they compare to the potential tax on additional compensation received by the owner as an individual taxpayer. Guys, all that means is this, because here's where agents back themselves up against a wall. Agents are out there right now, and you may have done this before, and that's fine, okay? Now you're going to know. Where you guys meet a business owner, okay? You meet a small business owner, you say, oh, you should get an IUL, and you can write off the premiums to yourself. Guys, if the business is a sole proprietorship or if it's a pass-through entity, that is not how that works. I am not a tax advisor, so I can't be giving tax advice. I'm just telling you right now, there are no benefits to doing that. Okay, think about it. If you're a business owner, how do you get paid? Anyone? Jump in here. If you own a business, who pays you?
Employee.
The business, right? If I own a business, right, and my business generates revenue, okay? Well, in order for me to get paid, I'm taking money from my revenue. I'm paying myself from my business, right? Pass-through entity, okay? Sole proprietorships, all right? There's no point in me taking money from the revenue of my business, putting it in my pocket, taking it out of my pocket, and putting it into an IUL. Excuse me. You should do that, actually. Just get your own IUL. If you're a business owner and you want the advantages of an IUL for your business, just open up a policy on your own. You don't need your business to pay for it because you think there's going to be tax advantages. Guys, unless your CPA at that business gets involved and says, hey, I can find a way for you to get tax advantages if you're doing that, then go right ahead, guys. If you have a CPA that good, move forward, right? We're not going to get involved in that. We're the life insurance agents. We're the financial advisors here, right? We're not going to get involved in that, what that CPA is doing. But most of the time, guys, if you're talking to a business owner about tax advantages and getting an IUL to do that, that's not how it's going to work, okay? The business owner is collecting revenue from collecting salary from their business, Okay, they are going to be taxed on that money. Does that make sense?
Hey, Jesse.
Just like, yeah, go ahead, Ray.
So this is just basically, when I have a business that I create, I W-2 myself.
Good.
So then on the W-2, I have, let's say I'm paying myself $65,000 on my W-2 salary.
Right.
Then I go, hey, I want to add the bonus.
Yep.
And that's where on my payroll, it was monthly. But
exactly.
If it was just, hey, I have a business, and then I'm getting a 1099, and then this business is, like you said, the sole prop.
Sole prop.
It's under my own social, not yeah.
Yep.
This is where you're saying, hey, so I'm paying $500 on the premium. My business is paying for it, but I get a 1099.
No.
So.
No. Exactly. You're taking money. You're putting money in one pocket, taking out of the other. It's
essentially you have to have either a W-2 earner and show that as a bonus.
Exactly. Guys, it works the best when it's for an employee, because now you go back to why I talked about why you would get it in the first place, right? It is to help attract and retain employees. But so many times agents back themselves into that wall, and you meet a business owner, you're so excited. Ray, also, by the way, Ray, that was exactly correct, right? But we get so excited because we heard about these tax advantages, and someone told you that, if you're a business owner, you can open up an IUL and your business can pay for it, and you're going to be able to write off all the premiums, and no one's ever going to get taxed on it, right? No. Okay, guys, someone has to be taxed on the money. And if you're the business owner, either you're getting taxed or your business is getting taxed on it, right? Mm-hmm. So it just doesn't always work out that way. Now, like I said, guys, I'm not a CPA. I'm not a tax advisor. If you have a CPA that somehow moves that money into a certain account where they're writing it off both ways and they're avoiding the IRS, that is not my business, all right? It is illegal. Okay, it sounds illegal, right? Just saying it, but it is not my business. You with me? That's not our job, guys, right? My job is to approach small business owners and say to them, hey, what's keeping you up at night, right? Is it employee turnover? Is it you don't have the best 401k plans? Is it, your top employee wants to leave because you can't offer them another $10,000 in salary or 15 or 20, and they have this offer to go to another company that will pay them that 15 grand. Well, maybe let's talk about this executive bonus arrangement that the IRS considers Section 162. Okay, maybe we can figure out a way to where your business can pay into this index universal life product that I can train you on, and I'll talk to you about and build you the illustration. But maybe your business can pay into that for this employee, and your business will get to write it off, okay, at the end of the year. Now, that employee, it will be considered taxable income because it's technically a bonus. But if you show them what this IUL does for them, they're not worried about that, right? That money that I'm putting into it's going to double, triple. It's attached to a death benefit, right? They'll have living benefits on there, hopefully, that they can use. God forbid they become ill, right? But they're going to have the advantages of it. Let's see if that might entice that employee to stick around, right? So, yeah, we just don't want to back ourselves into a wall, guys. Because I hear it so many times, agents call me, hey, Jesse, I just met with a business owner. They want to open up an IUL on themselves, and they want the business to pay for it because they want to avoid the IRS. And I'm like, oh, man. Well, I hope you didn't say that to them, because that is not how it works, right? Someone's going to pay taxes, guys, right? That's how either the business is not going to pay and the employer does, or the employer pays and the employee doesn't. Someone is paying taxes somewhere along the lines, guys, right? Mm-hmm. What's that? Have you guys ever read the book, or it's The Power of Zero, right? David McKnight says it. He says you're either getting taxed on the seed or you're getting taxed on the harvest. Mm-hmm. You'll be taxed on one of them, right? If they start taxing on both, we are in tough shape, right? But that has not ever happened. So just remember that, okay? Now, there's something called a restricted executive bonus range. The question I get all the time is, well, Jesse, what if the employee leaves while you're paying for their IUL? So an example, right? Real life example. I open up a policy for Ging. I say, Ging, don't leave me. All right. I know I can't give you that $15,000 a year in salary. Okay. But what I can do, Ging, is I can fund this product, this IUL product that I'll educate you on, $15,000 a year. Okay. It will show up as taxable income on your W-2 at the end of the year. Okay. But I'm going to put that into an IUL. Okay. And I will fund it, Ging, for 15 years. The contract that we come up with together, I will fund it for 15 years, okay? But, Ging, you can't touch it for 10. Mm-hmm. It's going to be yours, all right? And you're going to choose a beneficiary, but for the first 10 years, you can't touch any of the money that's in there. You can't surrender it, okay? You can't use it as collateral, okay? You can't give it to someone else as a gift. Right? For the first 10 years, you're not going to be able to touch it. After year 10, Ging, do whatever you want. Right? Take it over. Right? I'm still going to pay for it for 15 years, but after year 10, even if you leave me, Ging, then you'll just take over the premium payments, or you can do whatever you want with it. Right? It's yours. Okay? It's called a restricted executive bonus arrangement. There's a form that you can always fill out with us, okay, that helps you kind of create that restricted executive bonus arrangement. And all it is just the business is setting limitations, right? What do we know about the IUL, guys? The more you fund it, the proper way you fund it for a longer period of time, it's only better for the person, right? It's only better for that policy. So we don't want businesses paying for IULs and properly funding them, and then that employee, going in there and messing it up. Right? That's not the point. We want that business to get everything they can out of this IUL. So you might set up a restricted executive bonus arrangement between that business and employer. Okay? Pretty common, I would say. But even if Ging leaves, right, after a year 11, that's fine. Okay? I mean, she could leave at year 5 too. And maybe somewhere in the restricted bonus arrangement says, hey, Ging, if you leave in 5 years, well, then you are in charge now of taking over the premium policy or doing whatever you want with it, right? If you leave, it's up to you. You can have it. Do whatever you want with it. Okay? Maybe that's laid out in the REBA, we call it. It's just a special endorsement on that life insurance policy. That's all. And a good way to lift the REBA, it's easy. You can just call into Transamerica. You can write a letter of intent saying, hey, we no longer want that restricted executive bonus arrangement. Ging has full power of this policy. She can do whatever she wants with it. Okay? Here are some of the REBA restrictions that you usually see, right? Hey, Ging, for the first 5 to 10 years, you're not going to be able to borrow or withdraw cash from it. Leave it alone. You can't surrender it. You can't collaterally assign it for the policy as a loan, and you can't change ownership. You can't give it to someone as a gift. All right? Just leave it alone. If you leave it alone, though, for 10 years, here's what it's going to look like, right? It's going to be great. Let it be. And then by the time you retire, what do we know about the IUL when it's properly funded? It's a great retirement supplement, okay? And so when you go in there and build the IUL, you're really building it for that. You'll find that most of these executive bonus arrangements are built with that lower death benefit, and we're max funding it, right? Because we're really trying to get that accumulation portion working, right? So the lower death benefit, the higher accumulation is when we're funding it properly. This is a good slide to take a picture of. All right. So up here, you have the employer, the business. Okay. Number 1, pays the premiums to Transamerica. Okay. You can also pay the employee, right? Deemed a bonus, which is tax deductible to the employer. Okay. But most of the time, guys, you're seeing this one where the business usually just pays Transamerica. Okay. Okay. It's the employee's policy. They get to have all the benefits of the policy. Tax-free access to the policy cash surrender values. Okay. They get to choose beneficiaries on the policy. The employee, again, still does pay those income taxes on that bonus, guys. But they know that bonus is going directly into that product, which is accumulating, right? Rather than them just getting $20,000, paying the taxes on it, and then who knows what they're doing with that remaining amount, right? I know if someone, guys, think about it this way. If you're an employee and your boss comes up to you and says, hey, I'm going to write you a check, $20,000 as a bonus at the end of the year. Awesome. Yes, you're going to have to pay taxes on that 20 grand. Are you going to take that 20 grand and go get an IUL, guys? How many employees are going to go do that? I mean, realistically, guys, you know the drill. Yeah. You guys have been in this industry for a while. You guys meet with clients all the time. They're probably not going to go take that money and say, oh, I'm going to go get an IUL with all of this every year, right? No. Okay? So you're kind of just doing it for them, right? You're paying Transamerica. You're saying, hey, there's $20,000 going into this IUL. Okay? You're going to pay taxes on that 20 grand, but that 20 grand I'm putting into this IUL for you is growing. It's also attached to a death benefit. Leave it alone for 10 years, and here's what that 20 grand a year in those 10 years, so that $200,000 is going to equal. We're going to run an illustration too today, guys, so you'll see what I'm talking about. But again, it's just a simple IUL. Here's kind of an example, guys. I'm going to go through one in the actual illustration real quick. So it's as simple as this, guys. You now know the reason why you would get an executive bonus arrangement, right? Okay. And I'm sorry if I ruined your day by saying that most of the time it doesn't work for the business owners, guys. I'm not saying that. I'm not saying if you're a business owner and you want to get an IUL and use the benefits of the IUL for your business, that's the same thing, right? Do it. It's a great idea, right? Use the benefits of a properly funded IUL for your business, sure, okay? But a true executive bonus arrangement is this, okay? So sorry for picking on you today, gang. You're just kind of... All right. Ging's my top rep, right? She's my go-to. Her and I have come up with a bonus plan, really, right? And she knows I'm going to be writing her a bonus at the end of the year. But I'm not going to pay it to her directly, all right? I'm going to pay it to Transamerica directly. For the next 15 years. All right, gang, stay with me for 15 years, all right? Give me 15 years, gang. Let me show you why I say 15 years, okay? Give me 15 years, gang. I promise that you are worth it to me. I promise that this company values you, all right? Stick with me, gang. Guys, when I'm building these illustrations and you see me doing this type of thing, I'm not telling you to do that for your clients, okay? That is not what I'm doing, all right? You guys are the advisors. You guys have to come up with that, but you will notice that I will do that oftentimes, all right? Add the riders, gang. You're going to have living benefit riders on here. God forbid you become ill. Maybe even add long-term care on there, guys. Again, all I'm doing is building an IUL for that client. But look at this type of IUL, guys. When Ging sees that I'm going to fund this policy 20 years for $20,000 for 15 years, I'm going to stop, right? Maybe after 15 years, maybe when she's in her 50s, she goes to work for someone else, right? I don't know. I put $300,000 into this IUL for her, okay? After year 15, she's got $468,000. So that bonus that I paid to her, that bonus that she received, I could have just given her $300,000 over a 15-year period, right? And she would have paid taxes on that, yeah? Or I could have put it into an IUL. The company would be able to write off that $20,000. That $300,000 turns into $468,000 with a death benefit of $940,000. Remember, this is her policy. Now, let's say she just forgets about it. She says, oh, thanks a lot, Jesse. These last 15 years have been great. Really appreciate you putting all that money to the IUL for me. I know you're not paying on it anymore. I'm just going to let that thing sit until I'm 65. now she's got an IUL that she didn't pay $1 into, where she has 1.167773 in cash surrender value and a $1.8 million death benefit. So if she wanted to, on top of her retirement, okay, again, in addition to, let's say she wanted to borrow from this thing, she has an additional $91,000 for 20 years, okay? On top of, because remember, this is an executive bonus range. Ging is probably pretty high up as an executive, okay? So she probably has other sources of retirement income coming in. But I call this fun money. Why? Because Ging is going to be able to pull out of this policy. We're looking at about $91,000 each year on top of her other things, guys. But is Ging going to ever pay taxes on any of this? No. Does she ever have to pay back Transamerica any of this? No. And let's say, right now, life expectancy for a healthy female in America, 91, 92. Let's say passes away at age 92. Someone in her family is going to get an additional $350,000 tax-free. Okay? Just the IUL. That's all it is. But it's a properly funded IUL. You'll notice that when you're building these executive bonus arrangements correctly, they're usually properly funded, right? We're talking annual payments, 10, 15, 20, sometimes more. Again, that's when the business gets involved with their CPA and says, hey, how much money can I pay Ging in a reasonable amount that the IRS will allow me to write off at the end of the year? $20,000, Jesse. $30,000, Jesse, right? That's between me and my CPA, but all Ging has to do is just agree to it, right?
Hey, Jesse?
Yeah, go ahead, Ray.
Is there a rule of thumb on, I know you mentioned about the 10, 15%, the bonus has to be realistic, but is there any particular...
Let's ask.
Okay.
Is there a rule of thumb when it comes to reasonable, a reasonable amount of bonus the IRS uses? As you can tell, right, I'm not a CPA, nor do I want to be, or a tax advisor. So all of these type of questions I just look up. Actually, you know what, Trey? Or hold on, Ray. Let me ask Trey Fairman real quick. If you guys don't know Trey Fairman, I was going to bring him up at the end of the call. Is there a rule?
I saw there was one brochure that says 13 or 124 or 25%, something like that. So I figured maybe it'd be a good question to ask.
25% would be high, I would assume, right? But is there a rule somewhere called original conversation? But let's see. Probably not going to be as easy as I tried to make it look here, guys, to find. I couldn't. Trying to find out what the IRS is thinking or what they do is like pulling teeth. I would rather pull teeth, actually. Yeah. You said you saw like somewhere between 13 and 25%, Ray? I would probably say that the ones that I'm seeing are closer to the 13 range, Ray. All 25 right. Would be high. Like, think about it. If you make $100,000 a year and they're writing you a $25,000 bonus, that's a lot. That would be awesome.
Yeah, there was one, I think, brochure that The bonus is 25,000. There's a 45% IRS. It was a bit confusing, so that's why.
Let's look at this one. Let's do this one, actually. Let's look at this example.
Okay.
So, maybe it tells us. An executive bonus widget pays $30,000 annual premiums. Yeah, see, it doesn't tell us how much money he makes every year. Total bonuses paid to Mike, $625. Actually. So yeah, this guy, I think they're assuming this guy, annual bonus paid to Mike, grossed up to 28% tax bracket, $41,000. Tax savings, 21%. So he's saving $8,000. Total bonuses is $625. This guy's making about $500,000 a year. I'll get back to you on that, Ray.
All right, thanks.
It's a great question.
Thanks. I did ask a tax guy about that, and
yeah, ask it. If you get an answer, let me know.
I didn't get an answer, so that's why I was like,
yeah, I mean, those guys are, yeah. Guys, if when it comes to these executive bonus arrangements, if you're working on one, and a key person is going to take 5 minutes, guys, it's so easy for me to explain. All right. If you guys have a business, small business owner, and you guys are talking to them, you're saying, hey, what's keeping you up at night? They're going to say taxes, and they're going to say, I'm losing employees, right? Just let them talk. Say, hey, I might have a solution for you to help retain those and attract better employees. Let's talk about this executive bonus arrangement. All it is an IUL, right? I can talk to you about the IUL. Maybe we can set one up. Also, if you don't have an IUL, you can also open up an IUL, right? You're paying for it out of your own pocket, but you can use the benefits of it for your business, right, guys? Let them use the IUL benefits for their company. That's fine as well. But they're really just opening up an IUL on themselves, right? That's it, okay? So get me involved, right? Reach out to me and say, hey, Jesse, I'm working with a small business owner. Here's the situation. What do you think we should do? What are some questions I can ask? Just come directly to me. Because the first time you guys do it, it's so easy to do the second time. You'll realize it's just second nature. You're like, oh, yes, we should do it this way. No, that doesn't make sense. It's easy. Okay? So just reach out to me. We also have a dedicated team. Trey Fameron's the guy I'm talking about right now. Trey Fameron is the director of advanced markets. You guys will see emails coming from me starting this week, next week, and every other week, where I'm sending out emails. I'm email blasting you guys. All right? Look out for those emails, because in those emails will be trainings from Trey Fameron and the advanced markets team, where he gets involved and he'll do trainings on case designs, actual cases we're working on, big executive bonus arrangement policies, key employee policies like we're going to talk about. So bottom line, if you're working on these scenarios, these strategies, or you think you might be able to talk to someone about them, reach out to me directly. All right? Let's talk about a key employee, though. We'll end with this one because it's super easy. All right? Key employee life insurance. It is just another strategy for using life insurance, right? Very easy, guys. A life insurance policy is purchased by a business to protect against the loss of a key person. That is it. All right? Let me tell you guys something. The business owner is the most key employee. Makes sense, right? Mm-hmm. If something happens to that business owner, they die too early or they get ill, right? Well, who's going to run the business afterwards? Is there a plan? If you guys know a small business owner and you ask them, hey, do you have any insurance protecting your business? God forbid something happens to you. They're like, oh, I didn't. What do you mean? Oh, do I have business insurance? No, I'm talking about life insurance, so that if something happens to you, your business will receive a tax-free benefit. Okay? Your business will receive a tax-free benefit that someone, right, behind you, maybe your next of kin, maybe your partner, maybe your kids, maybe your spouse, can take that money and continue running the business with it. Is that something you're interested in? That's simple. Okay? This key employee, what is a key employee, right? It's someone with a specialized skill set or knowledge base. Okay? Let me give you guys another example. If I own a business, okay, Ray is my top engineer. If something happens to Ray, I'm not going to be able to make the microchips that my company sells. So I'm going to approach Ray. I'm going to say, Ray, you're super valuable to me. Okay? If something happens to you, man, I'm going to lose $500,000, right? I'm going to be out $1 million at least. So with your permission, I'm going to open up $1 million life insurance policy off you. But Ray, this is not your life insurance policy. I'm going to pay for it. The business is going to own it, and I'm going to be the beneficiary, the business. Okay? All you are is the insured, Ray. All right? And this is directly to benefit the business in the event that something happens to you unexpectedly while you're working here. Got it? The business is the benefiting, guys. Okay? It is to protect the business from potential loss of revenue. Okay? Here's some impacts of losing that a key employee. Guys, you can make an argument that anyone's a key employee in a business, really, if you wanted to. In a small business, you can make the argument that anyone's a key employee. Okay? Now, if you're writing a key employee policy, it's very simple. The business is the owner. The business is the payer. The business is the beneficiary. The business is the owner. The business is the payer. The business is the beneficiary. The employee is the insured, obviously, right? Whether it's the business owner who's the employee or the insured, or just a key person, right? Or another employee who's the insured. Okay? The business has to approach that key employee, if it's not the business owner, with written consent. I need to ask Ray, hey, Ray, can I insure your life up to $1 million? The employee, the business is going to be the beneficiary. We're going to receive the money, God forbid something happens to you. Okay? This is strictly to protect the business, guys. There's no, well, what about the employee? No, this is for the business. That's it. It's a key employee life insurance policy. The business is the owner. The business is the payer. The business is the beneficiary. Just like executive bonus, if you're writing a key employee policy for the first time, you need to reach out to me. I will help you go through the underwriting. I will help you submit the cover letter that you have to do. I will help. The application's so easy too. In the application, it says, what type of policy is this? You say business, and then it says, what option? You say key person. Okay? Let me help you with that first one. I'm not going to go through this because there's one thing I want to end on, right? Key person, super easy, guys. Any questions on key person? It's that easy. Okay? The business is getting a life insurance policy on a key person in that business so that if something happens to them, they are protected.
Hey, Jesse.
Yeah.
So if, let's say that the key person is now 77 years old.
Okay.
Of course, they have to go through approval on health, et cetera, et cetera.
It's hard.
Correct?
Absolutely. That would be really hard to do.
Okay.
So I actually just ran into that recently where the employee was 70 and he was trying to get a life insurance policy on himself so that the money would go to the business, but he was uninsurable.
Perfect.
Yeah, great question.
So
it's exactly right.
It has to go through underwriting and medical.
Yeah. It's a life insurance policy. Guys, remember in the beginning when we talked about all these are strategies.
Yeah.
The IUL, the term is still the IUL term. It's not like you call in and say, hey, Jesse, do you have a key person policy or do you have an executive bonus policy? No. It's just, it's usually an IUL for executive bonus and it's usually a term for a key person. Why? Key person, they're only usually working there for a certain period of time, right? So you see a lot of terms being key person. But could a key person policy be an IUL? Sure. But most of the time it's a term. Here's why, guys. Watch this. If you're a business owner, if I own a business and I know the strategies because I have a really good life insurance agent and advisor like you guys, right? And I know that there are ways to use life insurance to protect my business, right? So if I own a business and I approach Ray, you're super valuable to me, man. if something happens to you, my business is going to be hurt. So I'm going to get a life insurance policy with your consent up to $1 million, but I'm going to own it, Ray. I'm going to be the payer. I'm going to be the beneficiary. The business is, sorry, not me, the business, my business will. All right, Ray, so I need your consent on that. Well, Ray's probably going to say, hey, Jesse, I appreciate how much you appreciate me, and I appreciate how much I mean to your company, but what's in it for me?
Mm-hmm.
Like, right? That's probably just a natural question, and I'm sure you guys have thought about that. Well, what's in it for the employee? Well, guess what, Ray? Watch what I do here. Hey, Ray, have you ever heard of an IUL? Okay, Ray, if you haven't heard of an IUL, guess what I can do? Okay, I can write you a bonus at the end of the year, but instead of giving you that bonus, Ray, of 20 grand, I'm going to put it into an IUL. Let me show you how the IUL works. And guess what, Ray? This policy is going to be called an executive bonus arrangement. It's an IUL life insurance policy. We'll get it with Transamerica, okay? I'm going to fund it, but you're going to be the owner of it, Ray. Mm-hmm. You're the insured, and guess what? You get to choose a beneficiary. So that's your policy. So I'm going to fund that one, and it's going to grow, double, triple, all right? And you get to reap all the benefits of it. So now the business is protected. God forbid Ray passes away, and Ray ain't going anywhere, right? Because I just helped retain him by getting him an executive bonus arrangement. That's 2 policies, guys, for you as the agent. Okay? If that makes sense. Use the key person to get your foot in the door for those executive bonus arrangements, because it makes perfect sense to where an employee might say, hey, Jesse, what's in it for me? Right? And that's when you hit them with the executive bonus. It's a win-win for the business, guys. So now we're protecting small businesses, guys, in the event that the key person passes away, but also we're helping retain and attract those top employees. So we're helping protect them from employee turnover. That is the point of the business planning using life insurance. How are we using life insurance to protect small businesses, guys? It is not tax advantages. I'll be honest with you guys. I'm sorry to break it to you. It really isn't. Like, yes, the business does get to write off that executive bonus arrangement if it's done correctly, but that's not the reason why we do it, right? Like, you don't approach people and say, hey, guys, do you want a bunch of tax advantages from your business? Well, let's get a life insurance policy. No, that's not really why we're doing it. We're doing it to protect the business from employee turnover, or protect the business from, God forbid, something happens to your key person and you're going to lose a lot of money if they pass away, right? There's a difference. All right. What questions do you guys have?
Hey, Jesse, I may call you. I'm actually meeting someone now, owns a medical facility.
Okay,
Got
great.
2 partners.
Okay.
So,
do they have ask them if they have any like buy-sell agreements in place if like something happens to one of the partners or anything like that?
No.
Cool. They don't?
So.
Okay, cool. Let's talk about that then. Yeah, I would love to, Ray, and we can maybe set up a call with Trey. So what I'll ask, Ray, is just get as much information as you can from them.
Okay.
Let me actually share this with you too real quick, and everyone. On Agent Central, right? I told you guys last time we met, I'm going to use Agent Central a lot. I love Agent Central. If you guys go to, and Ray, this will help you. If you go to Agent Central and you go to prospecting and you go to advanced markets, you can even go to business planning, but go to advanced markets, scroll down, planning for business. But this resource library is super helpful, Ray. If you open up this resource library, business planning using life insurance, all of the guides for executive bonus, there's a field guide for business planning using life insurance, okay? But there's also this basics of a buy-sell agreement, Ray. Maybe share that with these guys or these people, and ask them these questions. Who's selling? Who's buying? Do you have anything set up in that event that someone is going to sell or someone's going to buy from another, right? Do you guys have anything in place? God forbid something happens to one of the partners, right? Go through the buy-sell agreement. Just go through it with them. If this is something, then they're like, no, we don't have any of that set up, right? Reach out to me. But just get as much information as you can, right? I'm talking ages. I want the names. I want ages. I want a little bit about their health, right? Talk about, maybe find out how much each of them own of the company, if they're partners, how much each own, right? Percentage-wise. Do they have anything in place? Right? Pretty simple. And if not, what are they interested in? Right? Do they want to put anything in place? Do they plan on selling the company to maybe like their son or daughter or anything like that?
No, actually, just a little bit. Well, I guess we'll talk maybe.
No, go ahead. Go ahead, Ray.
So they bought a building for about 1.3 million,
Okay.
and so I told them, hey, anything happens to any of the partners, who's responsible for that one?
Exactly. Yeah.
So.
Yeah, I mean, buy-sell agreement sounds perfect for this situation.
Yeah.
Or just a life insurance policy that one of them opens up. That easy.
Perfect. So
Cool.
I think there was a checklist I saw on.
Okay.
Basic.
Yeah.
All right.
Let's look at that, right? Let's build that. Here's a lot of our directors, guys, you can find. Here's Trey Fairman, the one I work with often. If you guys are building those, Ray, if we can meet with Trey, and Trey is much more advanced when it comes to these business policies because that's all he's doing, building these types of things. So we can set up a call with him, Ray. We can set it up soon, honestly, if you want to. Set up even next Monday or something like that. I have some availability.
Yeah, that sounds good. I'll meet with them today.
Cool. Yeah. Shoot me an email after you meet with them, and then let's set up a meeting with Trey, and we'll talk to Trey about the situation, see what he says, and then we'll go from there, if that's all right.
Sounds good.
Cool. All right. Any more questions, guys? I know that was kind of a lot of information, right? I try my best to just make it like more realistic for you guys rather than reading slides at you. Just real life examples and like how the conversation might actually go. But keep it simple, guys. It's not meant to be confusing, right? At the end of the day, we're just finding ways to protect clients, right? So it should just add something to your portfolio, right? Like you guys can, if you guys are sitting down with people, one thing I used to always like to say when I was sitting down with clients is, let's talk about your situation today. We're going to talk about your goals. We're going to talk about your budget, right? We're going to talk a little bit about your health. But the great thing about what I do is I don't represent one company, right? And you guys don't either, really. Yes, you probably do a lot of business with Transamerica, but you guys can do a lot of business with Nationwide. You can do a lot of business with PacLife. You guys can go to other companies. You guys can help anyone, right? Find out their situation, okay? But all this is just more, tools in your toolbox. That's it. So when you're sitting down with clients, let them know, hey, tell me, just let's talk, right? Tell me your situation. Let's talk about your goals because I can help anyone, right? And this is just more things to add to that, all right? Pretty simple. All right, well, if I don't have any questions,
All right. Thank you.
Thanks for setting this up, gang. Appreciate all you guys.
Thank you, Jesse.
You're welcome.
Thanks, Jesse.
Yeah, absolutely. If you guys need anything, let me know. If I don't talk to you before next week, I'll see you guys next Wednesday.
All right. Sounds good.
All right, cool. I'm excited.
All right.
All right. Take care, guys.
Bye.
God bless you. Bye.
What mo yung mga pangutana?
They all left.
All right, guys. Bye.
Bye.